Hello, everyone. Welcome to the third lesson of our course today. I am the host today, David, and I will be the second host for the third and fourth lesson. So, the topic today is some basic strategies for contract beginners, which can be useful to you. Okay, and let's now start. Before that, let's take a look at what we will discuss today. Our lesson will be divided into three parts. The first one is what mistakes do beginners often make and how they will think. The second one is we will tell you several strategies that beginners can take. And for the last one, we will introduce several key concepts that beginners should know. Then, let's begin with the first part. As we know, when people are green hands, they often make mistakes since they know little about what they are doing. It takes time for them to get familiar, and before that, they pay time, energy, even money for the mistakes. When traders start to trade contracts, they also make mistakes. If you want to make the fewest mistakes, first you should know how beginners think and why what they think leads them to mistakes. So let's check what beginners tend to think and why they make mistakes. First, since they are beginners, they are unfamiliar with the functions of the platform. Maybe they have learned some about contracts, but they don't have practical experience. There are many functions on the platform for traders to make better transactions, but they don't know that. It is reasonable for them to make mistakes. Second, since a contract is a tool with a high risk, beginners may have no experience of finance tools with such a high risk. When the market fluctuates, beginners may see a big profit or a big loss, which is beyond their expectation. So they can't keep calm and become panicked, making some wrong choices. Third, when they make a profit for one or two times, they may become prideful and make an over-investment without a plan. They don't know that traders always win and lose. Winning one or two times, even 10 times, 20 times, doesn't mean that you won't lose. Fourth, beginners are easy to be greedy. Maybe before building the position, they tell themselves, if I lose 10% this time, I will quit. But when they rarely lose 10%, they will think, maybe the condition will become better. Let me lower the stop loss point to 50%. Then they rarely lose 50%, and this happens again, so that at last they lose a lot. Actually, this happens not only for beginners, but also for experienced traders. Everyone should notice that. So you can see that there are many points that beginners should notice. There are many more about the 4 points about the main ones. So, next, let's discuss how to solve these problems. To overcome the wrong thoughts, let's rely on some strategies. And the best strategy is to follow some principles. The first principle, first demo, then real. MoonXBT offers demo mode, where beginners can trade with virtual assets. In the demo mode, beginners also make mistakes. However, as they are in the demo mode, there will be no loss of money. Beginners can get familiar with the functions of the platform and experience mistakes so that they can fix the mistakes when they use a real account. The second principle, strictly do what you have planned. As we mentioned before, if you make your stop loss point at 10%, then when you lose 10%, just close the position as planned. Never think that things will change. Just follow your plan. If you violate your plan once, there will be a second, a third time, and your investment will be controlled by emotion and greed instead of plan and reason. The third principle, strictly stop loss, but do not easily stop gain. These contracts are high risk, high yield investments. When you are making plans, you need to control risk and maximize profits. So when you are setting stop loss points and take profit points, be conservative about losses and be open to profits. For example, if you make your stop loss point at 20% and take profit point also at 20%, maybe it is not a good plan. If you make your stop loss point at 10%, take profit point at 30%, it is a better one. Okay, the last principle, take it easy. We must be clear that emotion management is a very important part of investment. When facing the high risk and high return brought by the contract, maintaining a normal mindset, avoiding panic and pride. You must know that losses and profits are so normal, which happen every day. Keep calm. After losses and profits happen, you have to recognize that these are history facts, which should never affect your future design. No matter if you win 200% or lose 50% in one day, it is history. Try to forget them and control your emotion. So, now we have known about the mistakes and the principles. Next, we must know some concepts. These are key concepts that beginners should know. The first is limited orders and market orders. They are the two basic order methods for crypto exchanges. In MoonXBT, limited orders is called trigger, and market orders is called market. Limited traders means placing the order at the limit. Limit orders set the maximum and minimum price at which you are willing to buy or sell. Market orders means placing the order at the market. Market orders are transactions, mean to execute as quickly as possible at the current market price. In a world when using limit orders, the trading price is decided by you, and when using market traders, the price is decided by the market. Leverage is a key concept of contracts. Leverage allows you to make big profits with little principal. At the same time, you also face higher risk. And this is leverage. Or we can say that leverage means a third party lends you money to trade. You will take the profit and also the risk. For example, if you have 10 USDT, you buy a long contract and your coin rises for 10%. You can have a profit of 1 USDT. But if you take a 100 times leverage, you can have a 1000 USDT fund to trade, and you can have a profit of 100 USDT. So you see, 100 times leverage makes your profit changing from 1 USDT to 100 USDT for 100 times. Moon XBT allows you to hold up to 150 leverage. You may take 150 times profit from reasonable leverage settings. However, in the example above, what will happen if your coin falls? As the former example, leverage makes traders trading 1000 USDT with a principal of only 10 USDT. The trading fund of 1000 USDT is offered by a third party. However, the risk is also bigger, so margin is needed to eliminate the risk. For example, if you buy a long contract but the price goes down, the margin can ensure that the loss of the third party can be paid. But if you lose too much, the margin can't cover the loss. What will happen? When your margin cannot pay the loss of the third party, your position will be closed forcibly, and you will lose your principal and margin. This is called liquidation. For example, you have 10 USDT, buy a long contract with 100 times leverage. So you have a trading fund of 1000 USDT. When the coin goes down for 1%, you have a loss of 10 USDT. That is 1000 and 1%, which is equal to your principal. That means if the coin continues to go down, the third party will have a loss. So your position will be liquidated. Certainly, if you have more margin, you can continue to wait for the coin to go up until your margin cannot cover your loss. Okay, and last of the lesson, we are going to explain two more concepts. The first one is slippage. Slippage is the difference between the expected price and the actual execution price of a market order. As with any market order, slippage may occur during times of high volatility, when liquidity in order books is insufficient to execute trades and the trigger price, bid and ask, resulting in a price gap. The second one is overnight hold. Overnight positions are open trades that have not been closed by the end of the regular trading day. Okay, that is all for today's lesson. I am so happy to communicate with all of you today, and hope this course can help you. And the post course today is sharing your trading strategies, and you can submit your work in the Telegram group. The link of the group is on the screen. Thank you for listening. See you next time.